From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Good afternoon. Well, do I call it a good afternoon, Danny?
Yeah,
It's the COB, the day in business and markets, and it's, well, perhaps a little bit of a negative day, it has to be said.
Yeah, not looking too great out there. Looks like the market's down about 1%, but I'm sure we'll check in with the index. But apparently the markets were surprised that the RBA went again.
Yeah, well, I mean, I think it was a matter, and I think the best phrasing that I heard going into the decision, it was a when or not if question, and well, the when wasn't supposed to be today necessarily.
Right.
So we didn't have, I think we had maybe 5 basis points by the time that the 230 rolled around actually in the curve. Lo and behold, low did it again, pun intended, I guess, off by 1% now. And well, I mean, it was already a negative session. We were down by 0.8, but that was the final kicker.
0.5
going into it, yeah, there you go. So that was the real kicker. And we'll take us to our 3 themes, because it's hard to talk about anything else other than this today, and it's, well, surprise, 25. And it's perhaps a bit of a narrow path from here. The RBA have said as much. We've got the GDP figures tomorrow. We've got Governor Lowe speaking. It's, well, starting to become a little bit dimmer out there, perhaps.
Dimmer in terms of the outlook?
I reckon.
Oh, absolutely, yeah. I mean, mortgagees, I mean, they're just going to get absolutely crushed. We're discussing that. How many people are really going to struggle? And we haven't even had all those people rolling off their fixed rate mortgages. I think, to quote Ernest Hemingway, how do you go bankrupt? Slowly at first and then quickly.
There you go, and hopefully not said from experience either by any means.
No, but I just think it's just like humans are strange. We don't like to change. It's almost like we have to be forced to change, and it's like, you know, everybody just wanted to go out and spend. We've had so much revenge travel and revenge spending, but eventually we're going to have to shut our wallets. All those of us that have mortgages or are exposed to rate rises or lose their jobs or everything horrible that comes with a slowing economic growth.
It is a good point. In fact, when I used to be a 2-bit sales dude on an FX desk, that's what they said. It's always a commitment to consistency and a resistance to change is one of the human being's biggest failures, and perhaps that's part of the story here. But let's just go to the States and backtrack 12 hours very quickly, because that's that last point there. Cause for pause potentially from the Fed, because we're actually starting to see, well, some fairly consistent weak data coming out of the US, at least weaker than expected with that services PMI data last night. So maybe a pause from the Fed coming through as well.
Maybe.
I
think you get as many views there as you do here. I'm not sure. I mean, maybe they will pause. Then again, they might go again, because you know that labour force data we had on Friday. I mean, there was something in that for everybody, wasn't there?
Yeah, it was.
You could take the bullish or the bearish view, but hours worked in the US are shrinking. I suspect the US is slowing as well, but I mean, the Fed and the RBA keep on looking at indicators that are in the rear view mirror.
Yeah.
And that's the problem. They're effectively driving the cars through the rearview mirror, which I'm sure Martin might want to chat about.
Oh, well, perhaps we will. From a figurative perspective, of course, too. I've been told Martin's a very competent driver and a very safe one at that. But let's just get across some of the areas of the market very quickly that did feel the pinch in particular today. It's no surprise that perhaps retailers, given their sensitivity to the consumer, were amongst the worst.
Yeah, and Baby Bunting down 16%. They had a shocker of a downgrade. I mean, they really are being slapped around. So yeah, no surprises, because as the consumer has to close the wallet, well, then discretionary items get hit first. And that's probably why even companies like Lovisa are being hit at the moment. Harvey Norman, obviously, people mightn't be renovating their houses or buying so much furniture, and I'll say. And well, let's look at healthcare too, because I don't know if that was a sort of a yield story, perhaps a kind of growth. Not a yield. It's
whack.
just a valuation compression. They sometimes go in and knock the stocks that typically trade at more expensive valuations, although they haven't tampered with information technology today. But that was really the only reason I could see that why you go in and sell some of those healthcare names.
Yes, and the banks too, not immune from the selling. No. And well, I mean, at some point in time and at different stages of the economic cycle, a rate rise mightn't be a terrible thing for the banks, but well, in this environment where you're potentially hiking into a fairly significant slowdown, the risk is, of course, maybe not good for the banks there either, who are continuing to trend lower.
What is going to happen with all these people that are under huge mortgage stress? That has ramifications for things like bad and doubtful debts.
Yeah.
And it's starting to potentially get up to levels that we saw in 2008. I mean, we're not there yet, but this has, consequences for the financial institutions, how they handle, how they structure the loans for these people.
Yeah, indeed. And again, it's a space we'll continue to keep an eye on. Just a few other stories of the day. I don't know if you followed it by any chance, but ASX was another one that was down quite considerably.
Yeah, that was a shocker.
It goes, I suppose, bad to worse for the business there.
It does.
I mean, I'm clearly not competent enough to be at the helm of an ASX listed company, but you sort of wonder when you effectively have, a huge moat, a monopoly on a business. They just can't seem to execute particularly well. There's chess issues, the costs that are associated with that, the dividend payout ratio is going to be potentially cut.
Think of it this way, there's a new CEO and she's come in, and the previous CEO, they've had multiple that haven't executed in terms of blockchain technology for chess. So what does the new CEO do? They basically lower the forecast. They say, look, we have a mess here, we need to deal with it, we're going to have to potentially cut the dividend payout ratio. It's been a favourite for investors because it has a high payout ratio. It's always been consistent, but also too, you've got to remember volumes on the ASX are shrinking, there's no corporate activity, and actually I saw in the AFR today that the Australian market has actually shrunk for the first time in 18 years because companies are being delisted, taken over, and there's not enough listings. So it's kind of getting it from all directions at the moment.
Is that a reversion to the mean story? Because I talk to a lot of I talk to a lot of
reversion
retail.
to the mean, I don't know.
Well, I talk to a lot of, say, retail brokers and retail platforms who have just seen volumes
You're talking
drop
volumes.
off. Well, yeah, that's the point,
Well,
right? That's
market.
how they make their money. So is that what they're doing? Or just going back to where we would have been a couple of years ago had we not had this hysteria?
I don't know. I think it's probably worse because rates are rising. But these are bear markets. Anyone that's lived through a bear market as a broker, as I have, as Martin has, knows the phone doesn't ring. It gets, and so basically there are not even, well, except for lunch.
I'll bet. Okay.
And they cut the credit card expenses, so that wasn't going to work too well.
No. Okay, well, we'll push on. We'll get to the stock of the day. We did have Nadine Blaney at the wheel. Sigma Healthcare was the stock.
Win for Sigma. I forecast the company. I had it as a hold. I assumed the status quo. I thought the EBOS might fight a little harder to keep it. Compelling offer put forward by Sigma, obviously, which Chemist Warehouse has accepted, hence the share price reaction. So if you go back a number of years when Sigma had the full Chemist Warehouse contract in full flight, stock was $1.30, $1.50, still only 80 cents. Not saying that's where it's going, but it's when I saw the announcement, I thought the market will like this, even though Sigma's basically writing a $100 million check to get the contract. It's still very positive from a Sigma point of view, and it helps management receive its medium-term objectives, which is to get EBIT in sort of the 1 to 2 or 1.5 to 2.5% range. So good outcome for Sigma. I thought an EBOS is down, I think 12%.
Yeah, 14%. For Sigma, is that eternal? I mean, is this now gonna? I think it'll tie them in with Chemist Warehouse now. I think, as an investor, there's always these unforeseens that you can't predict, and I think this is a case where Sigma really was in a very weak position. You can, if you open up a 10-year price chart, you'll see that the share price basically has gone nowhere amongst daily volatility, and I think they sort of had to do something, because otherwise the pressure just continues building on, and ultimately they might actually end up in serious trouble. This is a survival of Sigma, I think, but does it make them a fantastic investment? I very much have my doubts here.
Okay, so it was clearly articulated there, just the story behind the move and why it was the stock of the day, but almost just a fraction below 20% higher today. So some good news there, and I don't know, did you share the view? A nice little rally there, but not one.
It's not on my radar.
Not on your radar.
No.
Yeah, no, it's too small for me. I guess, I don't know, too risky. I'm 30 and I still can't take any risk. Anyway, let's move on and get to our guest. As always on a Tuesday, Martin Crabb from Shaw & Partners joins us live. Martin, we were talking about who called what beforehand and who's right and who's wrong. And well, as I understand it, you were a part of the chorus saying that they needed to go 25 today, or at least they would.
Yeah.
Woohoo!
Yeah. Oh, look, I think it was, as you said earlier, it was like a when, not if, because the futures were pricing 40 points across 3 meetings out to August. So, like, coin toss now, wait. So I think what pushed their hand is probably the wages outcome and the higher than expected April inflation. That was like, well, why wait a month? Okay, we can get the GDP numbers tomorrow, but they're March. I mean, who cares, right? And I would have thought that their liaison, so the oft lauded 1,500 individuals who talk to the RBA, or they claim to talk to get a sense of what's going on. Maybe the management team at any one of the ASX retailers would have told them how bad things have become literally in the last few weeks. And we know that these inflationary pressures are still there, and they're going to continue with higher wages, higher rents. So they may as well just knock it on the head now rather than wait. And that sets up, a rally in the dollar, because maybe the Fed doesn't go at the next meeting. Maybe we get higher dot plots, but just remember the Fed's almost at 5.5% rates already, right? So they're a long way ahead of us, both in terms of duration, but also the rate itself. So there's still almost a 1.5% interest rate differential between the Aussie and the US. So if they don't put up rates, it's put downward pressure on the dollar, and that's inflationary as well. So they've got to think about that too. So we look like we're heading for 4.35, and we look like we're going to stay there for a while.
Yeah. That whole comparison with the US, I mean, Australia has so much mortgage debt, so much, and it's more short dated. I mean,
it's only $2 trillion, right?
What's a trillion between friends, hey? But like, I know traditionally that rates would be higher in Australia versus the US. Yeah. But dare I say, this time it's different, because a lot of the US mortgages are, very long dated.
Yeah, they're 30-year fixed rate.
Exactly,
yeah.
and that's been part of the problem for the US. So one could argue, I mean, there was, I believe, a Freedom of Information document talking about the RBA saying that they might have to go to 4.8,
right,
which is well beyond even, I think, Deutsche Bank's expectations of 4.6.
Yeah.
Is that even feasible,
yeah,
given what might happen to the real estate market at one level? I mean, in terms of mortgage stress.
Yeah, I think there's a double whammy this time, because so much of our debt is fixed. Like traditionally, fixed rate mortgages are a very small feature in the Australian mortgage industry, because floating rates are typically better value for mortgagees than fixed rates are, because of the nature of the yield curve. The yield curve generally goes up, so the higher you go out, the higher the rate you get. Therefore, fixing's more expensive than floating. So we've had this anomalous period in history where fixing was so good, like 1.75, 1.8 to fix rates. It's like this free money. So a lot of us, me included, jumped on that bandwagon, and now we're all facing this. So not only does the central bank need to think about the typical lag that happens anyway, they need to think about the cliff. And yeah, they've got data on the cliff, but as you were saying earlier, it's not until the mortgage leaves the account that you stop spending the money, even if you think it's coming. And all this story about people building up buffers and stuff, what we're hearing from the banks is that that's done. People have spent the buffer, or they're still out going to Vivid in Sydney spending that buffer.
Or
it's
Europe.
Gone. Or getting on a plane to Europe, like half of our office and probably half of everywhere else seems to be, my Facebook page is just Paris, Croatia, whatever. And so, I think there's this double whammy impact, which makes rates an incredibly touchy break, as in put you through the windshield break. In America, as you said, because most of the mortgage debt is fixed rate 30 years, they can put rates up to 10. It's not really going to change people's spending, because they're not paying the market rate. They are on their credit card debt or their student loans, but most of the debt is fixed rate. So there, the Fed has to go higher than us in order to slow their economy down. So that interest rate differential is probably going to stay positive towards the US.
Interesting. We'll get a catch rate futures chart that you brought in, and you often do on these timelines when it comes through. But it just sort of illustrates well this sort of higher for longer. And there's international factors behind this too. At the start of May, we were still worrying maybe about some kind of banking crisis or whatever. Right. But still, it does seem to paint a little bit more of a negative picture about how high rates are going to have to go and how long they're going to have to stay there.
Yeah, I mean, the caveat, this was before the rate decision, so you can see the June futures are only pricing in a very small probability, like 4 points for this decision. So that June number's now 4.1. So I think, we run this again tonight when the market closes, that whole curve will be moving higher. And just remember the last paragraph of the statement on monetary policy, statement of the decision, left the door open for more monetary policy tightening. They didn't say increase in rates, they said monetary policy tightening, which leaves the door open for quantitative tightening, so taking some bonds out of the market, or also interest rate increases. So I think that orange curve there, which shows the current futures, that'll move higher, and it'll also flatten out, which is just any thought of interest rate cuts next year, probably not going to happen.
Yeah. And I think you brought a great chart too about this huge structural problem we have with immigration and the disparity between, we just don't have housing. Wasn't there a housing chart?
We do have a dwelling approvals chart that we can get up. That's the third chart that we had planned there. We can get to that, but
so basically, I mean, this is just a massive problem, is it not, Martin? You can't solve this overnight, and I can see the argy-bargy already coming out into the media today, blaming, Clover or blaming this person. And I mean, it's a long-term systemic problem, isn't it? Yeah. So how on earth are the politicians going to manage this problem? They want the immigration, but there's nowhere to put them.
Yeah, and it's difficult that, governments can't just wave their magic wand and make these things happen. You need developers to step in and start building. And you've seen, Harry Triguboff, one of the biggest builders in the country, saying, look, I can't make money building in Sydney.
It's too expensive.
It's too expensive to build, and the end market's not there at the price level that I want to sell at. People can't get the financing. So it's kind of all connected. You've got higher interest rates, you've got maybe the economy's slowing down a bit. Affordability is an issue. Yes, the wage rise increased that a little bit, but I think Governor Lowe's just taken that wage rise away from people with this latest hike, right? So we're back to square one. Yes, you've got all the planning issues and the red tape, which people always go on about. Reality is, if you want to get a house built, you're going to have to go through the red tape. That's life in Australia or any developed country. So you can't remove that. So it's really about how do you make the economics change? And the only way to say is, okay, let's get the government to subsidise rents or subsidise, building costs. They're already giving first home buyers 5% equity. There's already stamp duty exemption. So they're doing some things. And those programs are expensive, but it sounds like they're going to have to do more. I mean, obviously the Treasurer wants 1 million houses built in Australia, so that's great. But we're probably going to have to see more from Canberra and more from Macquarie Street in Sydney to make those economics change.
We do have Governor Lowe speaking tomorrow. I would imagine, maybe we're sort of dipping into politics here again, but he's going to get an absolute grilling if he hasn't already gotten one in the public and previous testimonies. I mean, how do you think this could potentially sort of play out here? Because it would seem, the governor might be out of a job in a couple of months, let's be perfectly honest. The communications here, how are you seeing them?
Well, they've improved. Obviously, there was a big mea culpa about what they did earlier in the year about not briefing the market and then doing a selective briefing. And to his credit, Governor Lowe, kind of fell on his sword a little bit in terms of saying we're reviewing our whole communications. And he had that speech in Perth and he sort of came clean and realised that they'd made a mistake. And I think they're probably working a bit harder. I think it sort of coincides with the Treasury's review of the Reserve Bank that suggests that they set up a separate monetary policy committee and that maybe it doesn't meet as regularly, and they're probably going to copy the Fed and have dot plots and more full minutes and talk about how people voted and maybe have more markets/economics background people on the MPC, on the Monetary Policy Committee. So I think all that's going to happen. I think Governor Lowe is unlikely to get re-elected for another term just because unfortunately there's been a few missteps, not just in terms of communication, but also zigging when they should be zagging and potentially leaving the whole tightening too late. and having to play catch up, and probably now at risk of over tightening. I mean, it's always difficult to say.
Yeah.
It's great in hindsight. We'll look back in a year and say, geez, they over tightened, didn't they? Couldn't they see the writing on the wall with all those retail downgrades? But yeah, so look, toughest job in the world. I wouldn't want it, and I think generally speaking, our governors have done a pretty good job at running monetary policy in this country. We've tended to avoid recessions, whereas most other countries have had yo-yo economies. Ours has been relatively stable, but I just think, yeah, tough gig for Philip Lowe.
Tough gig and tough times at the moment for many people. So, well, look, Martin, thank you so much for coming in
Always
again.
a pleasure.
It's a shame we don't have all better news to discuss, but hey, that's life, and that's life in the markets,
That's
isn't
right.
it?
A bull market will come one day.
Exactly. This too shall pass, hey?
Exactly.
Martin Crowe from Shore & Partners, thank you so much for your time.
Thank you.
Okay, let's get to the leaders and laggards. Well, I get the sense that they might be few and far between, but let's see what the leaders were for the session now. And
Coal
actually,
stock's
coal
going for a
bounced.
run. I couldn't find anything, but that doesn't mean very much.
No, well, I suppose we have seen just volatility, I suppose, in those coal futures prices anyway. So there you go, maybe a bit of a bounce. You got one?
A2 Milk, yes, they
yes.
have got that Chinese go-ahead, haven't they? I think that came out this morning.
Yes,
And
yes. In fact, we didn't cover that in the corporate news by any means. But yeah, A2 Milk and Partners in late wins China baby formula approval, which is huge there. And well, I suppose what gives another avenue other than the sort of Dago route to sell into China, perhaps. I don't know. Net wealth, an interesting one, especially for a day where the market was down overall. Sometimes it can be a bit of an interest rate story. It's the same as computer share, but we'll just have a double check as to if there's anything there driving that, or if it's just coincidental.
No.
And I get the sense that it might just be coincidental.
Yeah, nothing there.
Megaport is pulling back just a little bit because it had been on a bit of a run up until rather recently. Sorry, not pulling back, extending its run. Here we have, not too much news there either.
It might be, I don't necessarily, I suppose because they help with transitioning people into the cloud, into those data centres. Maybe it's caught a bit of the AI vibe.
Yeah, well,
as
that's all about the vibe, isn't it?
and Macquarie Telecom, etc. Yeah, that's
We're talking about the virtual cloud too here. We're not getting morbid on a day like this where rates have been high 25 again.
No.
Never.
Off-premise. Data storage.
Well, they're getting built everywhere. Marcus is Sparky, and again, we talk about the sort of infrastructure of the future. Or you do it all the time. There you go. There's a play in that, and perhaps the play was today. But let's get to the laggards now, and this will be
ASX.
a little bit broader.
Ouch.
ASX had spoken about it, and well, it was actually an interesting point you made before. Sort of air all the dirty laundry now. In politics, they say burn the political capital early. Perhaps just burn the literal capital early when it comes to CEOs taking the top job, but down 9.7%. The news there, I think the big part was this, that obviously the dividend payout ratio potentially being lowered.
Huge.
That's not good. Other names though, Domain, I hazard a guess that's got to be a house market story.
I don't know why though, because I don't think REA was as heavily hit. No, it wasn't at all. So I don't know, maybe somebody's sniffing out a downgrade. I actually think I saw an upgrade today, but I'm not too sure what's going on there. All with Cochlear, I'm not too sure there.
Yeah, BrainShift Holdings, I don't, again, that's just been the proxy play. In fact, we were talking about how one of the commercial partners of the business publishes some of their most popularly traded stocks. It would seem the likes of BrainShift and a few others are on that list.
Right.
I dare say a few punters out there just enjoying the AI theme, the volatility that's been generated from that, a two-way price movement that folks often enjoy. Qantas too, down. I'm not too sure. You're saying all your mates were going away to.
But eventually,
Europe.
that's got to. It's one of those things. I think they were talking about airfares coming down, and some people are saying, "Well, that's really good for travel, yada yada yada." But it actually could mean that they're already starting to see demand taper off. I mean, there will be revenge travel until you drop, but eventually people will go, "Well, I just can't afford this."
I'll second that. Let's get to the small caps now, perhaps. Peruse these audio pixels. Well done you. Up 64.9% for the day. I know I can hear you tip-tapping away on that one to see if we can find a reason for folks at home to explain that one. But Musgrave Minerals,
That looks like an error. Yeah, that's an
That's an
error.
error.
Sorry,
Sorry,
it should be up about 3%, according to my numbers. So I think that's
Yeah.
incorrect.
You haven't hit it, rich shareholders. I'm sorry, but Synlait Milk, that's a part of the A2 story, I do believe. So that's up 15%. Let's flip over to the small cap laggards.
Yep.
What do we got? Coal. Interestingly enough,
let's
that must be an idiosyncratic story.
Oh,
Actually,
let me
Tiger
just
Realm Coal.
check the price on that. Yes, that is actually down 22% today, and I have proposed issue. Yeah, they're having a capital
Placement.
raising. Yeah.
There we go.
Yeah.
So that's always good to get a little whisper in here on that stuff. Hopefully nothing went ex dividend. But
Baby bunting.
Baby bunting, we went through that story too, down 16%. Another consumer. Actually, that was a really big downgrade in terms of guidance too.
It's
wasn't
huge.
It? Massive.
Yeah, it's massive.
About
I mean,
40%
literally.
or something.
Yeah, I mean, like sales have just evaporated.
Yeah.
Yeah, no, but I do think that, as one of our colleagues pointed out, a lot of babies were born after the first lockdowns, 12 months, whatever, 9 months later, blah. So, it's the unwinding of being effectively a lockdown beneficiary.
We need another Costello policy, one for mum, one for dad, and one for the country to boost that one again.
They can't afford it.
They can't, we can't, can we? No, anyway. Won't put that idea to my girlfriend, that's for sure.
What's happening? What is happening overnight?
What's happening? Not much overnight. Tomorrow, though, Governor Lowe, GDP as well. Backward looking, but nevertheless, if you like to watch car accidents, I get the sense you might want to tune into that Governor Lowe speech because there is going to be an absolute grilling, I think, especially after that Fair Work decision. In politics, they call it optics. They were pretty explicit talking about the sort of wage issue in Australia. It's going to be, I suppose, some with particular sympathies in Parliament that they're going to give him a good hiding, I think. But for better or worse.
Yeah, exactly. It's all theatre at the end of the day sometimes.
Life is just a stage, isn't it?
Yes, except for people, it's their lives. Anyway, I think we better wrap up.
Right, yeah. When we start quoting Shakespeare, that's time to go. Anyway, remember, you can catch up on all the latest news and views on our website and app. Have a great night. We'll see you tomorrow morning.
Yep. Bye.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.